Good morning. It's Friday, January 10th, about 6 a.m. Central Time. Overnight, the precious metals are continuing higher after an explosive move and a relatively light volume trading session yesterday. Today, we'll see another round of event risk with the non-farm payroll data due out at 7:30 a.m. Central Time. Friday's U.S. non-farm payroll data is expected to show a slowdown in an otherwise healthy labor market. The median estimates are for figures of about 165,000 jobs added for the economy in December. The unemployment rate is expected to hold steady at about 4.2%, and the average hourly wage growth is seen as cooling just a touch from the month earlier. So if you know my process, you know what I'm going to do. I'm probably going to book some gains, tighten up some stops ahead of this type of risk. We've had an incredible week in these metals here, and really since the start of the year, well, after the first couple days of the year, and then it was really this full week that we saw quite a big pickup here, and it was really led by copper. So looking at some other overnight news headlines and just kind of a standout here, crude oil futures up about 3.2%, natural gas futures up about 3%, but natural gas, that's not a really big move compared to the crude oil, which is trading at 76.29, up about 3% right now. So oil rose to a 3-month high after another contraction in U.S. crude oil stockpiles. It's driven by the frigid weather. It's reflected also in the tighter global market as well. So you saw Brent crude futures, they advanced as much as 2.3%. They're surpassing $78 a barrel since the first time since mid-October. And then you've got crude oil inventories, especially at the storage hub in Cushing, Oklahoma. They dropped to the lowest level since 2014. That's what the government data showed here on Wednesday. I cover the government data report for the CME group every Wednesday here on the Breakout News. So copper, that's the one that took off. That's the one that broke out from that low right here. And if you get the Metals Edge, I outlined a double bottom in $4. Also, I went on CNBC and discussed copper as well on how AI and other things can really drive prices higher. And there's tailwinds, which is China's recovery and coming back up and really starting to buy and accumulate some of that copper. So copper's headed for its biggest weekly gain since September, and the optimism for demand is starting to gain in China. They are the largest consumer of the industrial metal. There's some fresh signs that consumption in China could be picking up here, even during this traditional kind of winter lull when they generally don't pick up quite a bit. So we saw their inventories in Shanghai, they fell to 82,000 tons. It's the lowest level in about 1 year, and that's according to the Shanghai metals market. So premiums for the domestic and the import cargoes, they had also rose to the highest level since September and December. So that's kind of your play of the different things that are moving on. And really, like if you look at your performance leaders, you look on the week, it's going to be platinum up 9.1%. You're going to see copper up 7.64%. And then you get to the heating oil, silver, and crude oil. So it's been a great start of the year for many of the commodity markets that we sit here and track. So looking at the overnight price action, you have February gold up $15 at 27.06. High was 27.1140, low was 26.9180. So it essentially opened up and took off from there. Now your silver market up 16 cents, 31.16. The gold silver ratio at 86:1. So silver is, in my opinion, somewhat lagging. I mean, my opinion is quite irrelevant, but it is lagging in correlation to the gold market with gold's performance, copper's performance. Silver should be, $32 in my opinion. You see platinum futures closed in, hit exactly 100,000 on the mark. So if someone was working to sell at 1,000, chances are they weren't filled there, because remember, it's got to go 1,000 bid in order for you to sell. So it would have been better to put $999.99 or 90 cents, whatever the minimum denomination increment would have been in order to get filled if it hits the 1,000 mark. We're even starting to see palladium pick up a bit, but at 960, it's really been lagging the platinum market. There is a period of time where palladium demand will drop below platinum demand because of the fact the way the consumption is done in the automotive industry. We've been expecting a crossover for about a year, and now that we've sustained below the platinum prices for what seems like a little bit here could be a week. I'm going to have to look at the data. Then you're going to might have seen that separation take place. We're seeing a recovery in Bitcoin, a recovery in Ethereum. Bitcoin futures up $3,300 at $95,445. Ethereum up $115. All your agricultural markets are slightly higher today. We do have a USDA report coming out later on today. If you look at corn, it's been one of the better performers. If you look at soybeans, they've been kind of neutral here. They need to break out of a range. They could go either way on there. Corn futures have extended higher. Look for kind of a capitulation point. I anticipate in my head that farmers are most likely going to do some forward hedging ahead of Trump coming into office. The dollar index sits generally flat, and most of the foreign currencies are flat right now, sitting at 109 on the dollar. You got the Aussie dollar, the British pound, the Canadian dollar, all under a little bit of pressure. Euro currency just slightly higher. Same thing with Japanese yen. Swiss franc just slightly lower. The equity markets are a bit volatile right now. When I started this video, they were just basically on the high of the session. Now they're all slightly weaker on the session. And then your 2s and your 10s are relatively flat. And the same thing with the bonds and everything else. So that's kind of your layout of all the different markets here. We do have sugar recovering and quite volatile in the cocoa market. Coffee sitting at 320. So that's kind of a general overview of everything that's going on in these markets here. So looking at CME's Fed watch tool, it's slipping a little bit more. So remember, it was like 11.5% chance that they cut 25 basis points at the January 29th meeting. Then it was like 8, then 6. Now we're at about 4.8% chance that they cut 25 basis points. So call this kind of off the table that they're going to cut it all. I saw something that those interest rate expectations had gone down to about like 1 to like 1.5 cuts in 2025. Now, why the heck is gold going up on that? Because of the fact that they know that eventually these higher for longer interest rates, nothing is moving in the real estate market whatsoever, and that these higher rates are going to play an important role on damaging this consumer. So if you get a downturn in the labor market, it could really weigh in on things. And then what it'll do is it'll accelerate the rate cuts again, and we'll all of a sudden have 2, 2.5, 3 interest rate cuts due out, and that's why gold futures are starting to push up. Remember, these markets look forward in time. So a lot of people were going, hey, they cut rates in December. Why the heck isn't gold screaming? Why was it down big that day? And everything was down big that day. Well, the rhetoric said that, and Jerome Powell said that they were just on the table. It was a 50-50 shot that they cut rates, and that they might not even cut rates again. So it was, so the market has to all of a sudden reprice in those forward 3-month out looking and go, oh crap, we're only going to cut we might only cut 1 to 2 times this year. So then the market plummets. Now we're down to just about 1, and markets are looking a little bit dicey with some of the things that are coming out, and the inflation with crude oil futures accelerating another 3% could really start to weigh in on the consumer. And then what happens? We go into stagflation, the best performing type of economic environment for the gold market there. So, and then all the other metals are going up because people want to own inflation assets. That's why if you work with us on Blue Line Capital on our wealth management side, a lot of people have traditional 80-20 portfolios, 80% stocks, 20% fixed income. We trim some of that fixed income exposure and we add some of the commodity markets, commodity related stocks in here to help keep your equity portfolio up with inflation and also still get that dividend payment, which acts as the coupon payment. So if you look at copper futures here, running back up, kind of flattening out a bit. Now they've gone to bullish trend. Now that you want to see that market continue to push higher in order to confirm the bullish trend. You do have stochastics in overbought territory. Doesn't mean it's overbought, just means that it's pushing into a bull market. MACD has turned positive as well. DMI had crossed over DMI plus. That was about a week and a half ago, and that's when that bull market, this mini bull market, had started. So where would I look to potentially add some positions? And this is not a recommendation out to the public. This is just my thoughts here, and that's what this video is generally designed to do. I send this out to the different employees that we work with, and they can get an overview of what my thinking is, and we provide that for you guys as well. I would look at something closer to the 50-day moving average on that copper market, and then look to get a stop near those contract lows. The gold market shifting to a neutral as long as we stay at this elevated level. Remember, we've identified $700, 2,700.8 as your neutral point. So we broke out above that here today. If we can close, we'll go neutral. If we close over 27.28, we're going to go into a bull market here. Silver still kind of lagging. The problem with the silver market, and don't crucify me, I just look at these things objectively. You look back in October, silver made a high, 35 bucks. You look back in December, silver around December 12th or so made another high around 32.50. 35, 32.50. Now where are we at right now? About 31.10 at the moment. That's a lower high. So you have a series of lower highs on the chart. You do have a double bottom down there in the low 29. So we're coming into this wedge type pattern. We need to see silver futures jump above 31.66, and then we'll see a breakout to the upside. So that's all I got for you guys here today. You have a great weekend. You need anything, you want to open up a futures account with us, send an email to info@Blue Line Futures. You got any questions, give me a call, 312-858-7303. Bill Baruch, my partner, will be on CNBC today on the halftime show. He will be discussing some of these portfolio moves that we make on the wealth management side. We'd love to get you involved with that. So again, remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.